Welcome, everybody. It is Crypto Moose. In the Moose is Loose, Mitchell Bouchard, your crypto and NFT investor. We've got a special guest here with us, waiting patiently. We've got Stephen Ward, CEO of VyFi. So we've used that DEX before, and we got some pretty sweet questions. So we're going to dive right into it. So, Stephen, do you want to say hi? Do you want to tell everybody who you are, what it is you're doing?
Hey guys, hello everyone. Yeah, my name's Stephen. I'm the CEO of VyFinance and also T-1, which is an upcoming launchpad, which we're doing in conjunction with MuesliSwap. And thank you so much for having me on here, Crypto Moose. And I should say thank you for being patient. I was late, so
No, don't worry about it. I wasn't even going to mention it. I was going to be like, I was the late one.
Nah,
Yeah.
you're too kind.
So what's that other venture you were telling me about?
That's a launchpad that we're bringing out in hopefully the mid to late Feb. We're going to be starting to announce the projects that we're working with, that we're going to be launching with initially in the sort of next month or so. We've got a pretty exciting list of projects that we're going to be launching that I think will get the community really pumped. But we're signing up all the contracts now. So we've still got a little bit of work to do before we can start announcing those formally. And the website to that is T-1, spelt out, the letter T, MINUSONE.pro. And you can definitely go check that out and maybe put that up on the screen for your audience as well. But we're here to talk about VyFi. We're not here to talk about T-1 today.
Yeah. Yeah, it's like a little spoiler. That's all right. So we're gonna start things off with why use VyFi. So right now there are other dexes. I know, I've gone over like MinSwap or several others, but VyFi, in my opinion, it did really well, right? Like you guys launched well. I like the way it works. I always mention every time, and I'm always honest about what I'm doing. Whenever I think about yield farming, I think of VyFi because the process seems easier, right? So why would people use VyFi over a different DEX tool or aggregator, whatever?
Well, I think one of the things you just said right there is, I would say, one of the main reasons. The way that I like to describe it is we have built a uniquely Cardano DEX implementing tooling in a manner that is uniquely Cardano. That is something that allows us to build things differently because we're thinking about it in a different manner. And I'll go through some examples of that. As an example, Cardano is all about stakeless it's not stakeless staking. What's it called again? Staking that allows you access to your tokens.
Yeah, like proof of stake, right?
Proof of stake. But even in proof of stake, right? Proof of stake, sometimes you still have to lock your token, like in Ethereum, right?
Yes.
Whereas Cardano, you don't have to lock your token. It's
you have self custody over your tokens without
that's the word I'm
sending
looking for.
it somewhere else. Yes.
Self custody. That's the word.
In fact, you can use it on a cold storage. I can hold ADA on here and do some delegation, and I'm not moving my assets away from my wallet. Yeah, it's non-custodial in that sense. Right?
Non-custodial staking.
Yeah.
I could say this is what happens when it's early.
That's why you got the moose here, right? The moose gets loose.
Exactly.
Right? Like you're good at building the dexes. I don't know. Moose getting loose.
You're here for the terminologies.
Getting better. I've been learning from you.
So we've got non-custodial staking is a core concept in Cardano, right? And we took that concept and we applied it to LP staking because it makes sense from a user basis. One, to keep that experience continuous with what the experience is on Cardano, except we have epochs. We have daily epochs for our farms, which means it's a little faster.
I like that. I like that a lot.
Yeah, and I think a lot of users do, right? And I know that we have a lot of users that they enjoy watching the time tick over and seeing it move from pending farm to available farm, and it's almost gamified with that. It keeps you coming back every day to come and farm. And secondly, as a result of implementing it in a way that is uniquely Cardano, we've been able to reduce the total number of steps that are required for the user in the process flow of engagement, right? So whether that mean from the perspective of adding liquidity, we've got L2 LPs for 5 liquidity pools. We're actually launching a few more L2 LPs next week, so on the 17th.
Nice.
So a few more L2 LPs are going to be coming out, and that means users can actually purchase LP tokens directly off the market, right? Because these LPs are non-custodial and staying in people's wallets, we've got liquidity pools for the LPs. So a brand new user doesn't even need to supply liquidity the manual way to be able to begin liquidity mining. They can just go to our market and buy a little bit of, let's say, the ADA Lenfi LP, and they can buy 200 ADA of it, and they're instantly farming as soon as that LP hits their wallet from the trade. Similarly, as a user, you can create the LP yourself, but as soon as the LP hits your wallet, you're instantly farming. You don't have to do anything else, right?
Yeah.
So that process flow is easier for the user. That also means that all farms are harvested simultaneously by default. You can't even harvest farms individually. It's only simultaneously. Then, of course, another reason that you'd use us, and this is something that I found really interesting. I think this is a strategic difference that we've really been implementing. When you look at our volume is always sitting around the 3rd or 4th DEX on Cardano. But when you look at our total users, we're generally number 2 on Cardano in terms of unique users on our DEX. I think last week Spectrum beat us. For the first time in 3 or 4 months, we weren't number 2. But the reason for that has very much been because our focus has been on minor tokens and smaller projects. So we've got a lot of liquidity for tokens that you can only get on us or MinSwap, right? Or us or Wing Riders. An example of that would be CGT, right? It's almost entirely all on Wing Riders, and we've got the second largest liquidity pool for CGT. IDP. There's heaps of examples of tokens where we've got the second largest liquidity pool for them.
Even
right?
SNEC, I realized that early. You guys were like one of the first ones.
Putting a focus on liquidity for these minor projects and working with minor projects to help them boost their liquidity. An example of that is a product that we're building called Lock and Load Vaults, which we'll talk about later.
Yeah, I love that.
And this real sort of focus on smaller projects has built us a large network of smaller projects that we work with. We're going to be launching the liquidity for whales soon. I believe it's on the 17th as well. What's happening on the 17th? Wow.
Yeah, that's your day, man.
Yeah, that is our day. The liquidity for whale will be launching soon. We'll be launching liquidity for projects that go through T-1. And that's something that I'm really excited for, and I can't really talk about those projects yet, unfortunately.
Yeah. You're gonna have to come back on. We'll have you back on.
Absolutely, and
that would be
in
cool.
the next sort of month, when I can actually start talking about these projects launching on T-1, because part of their launch on T-1 is of course launching their liquidity through VyFi, which is going to be giving us and our community exclusive access to a lot of decent tokens and a lot of large tokens that are going to be launching on Cardano soon.
Yeah, that's awesome. So, in terms of partnerships, because I know. Like I said, I've noticed that specifically with VyFi, you guys have access to you've had a lot of tokens that got listed on your DEX, right? So how did you do that? Is that because I mean, obviously the tools are great, but like, are you networking all the time? How do you pull that off?
Always. Yeah, and actually, we were just talking about this yesterday with one of my colleagues that and it was one of my business managers. We spend all of our time deep diving essentially the Cardano ecosystem, and we contact everybody. Like if you start a token in Cardano, I would expect to be hit up by one of my staff soon, right? Like
we got the Moose token coming. That would be a rug. That would be a rug if it was the Moose.
At least
token.
You're honest. The other side to that though is that it moves at an incredibly fast pace. You know, everything is changing. I sometimes, some days I honestly feel like a doctor or a surgeon, not in the respect that I have anything near as stressful as a doctor or a surgeon, because let's be honest, I run a business, but I'm not cutting people open.
Yeah.
But in the sense that you're always educating yourself, right? Like if you're not studying for 2 weeks, you're out of date.
If you're not subscribed to Crypto Moose, your net worth goes down 40%.
That's it, right?
You
need to stay up to date with everything.
That's
right?
what I'm saying. Well, look what happened 2 hours ago. By the way, 2 hours ago, there was news about a Bitcoin ETF, and I guess the Twitter of the SEC got hacked. So there was like a fake news going around that the Bitcoin spot ETF was out. That was 2 hours ago. Went nuts on Twitter. So like YouTubers were doing live videos talking about that. So as of right now, I don't think there's an ETF, but that happened recently. So
I missed that. I missed that. So yeah, look at that. See, it's stuff's happening all the time. Technology is moving super fast, right?
Yeah.
And then when you take into consideration that there's other blockchains as well, which is something that Scares the shit out of me.
So why would that scare you? Because I know, well, from my perspective, Ethereum's kind of like the go to smart contracts, but I like Cardano better, cheaper, faster.
Yeah, well, look, I'm thinking about it more from a business and employee perspective, right? And a resource perspective. If I have a circumstance where I'm on Cardano, I already have 2 full-time business managers, 1 part-time business manager reaching out, learning about the Cardano ecosystem, studying the project, studying the technology, working out what's happening, keeping up to date. And then if I just said to them, hey, can we also start keeping track of Solana too and start hitting up those projects as well? I mean, like, it's already a full-time job for 2 people to keep up with Cardano, let alone throwing down Solana. And then if you throw down Ethereum as well, you need a team of like 20.
Well, I remember in again, like I keep bringing up SNEC, and by the way, I don't even own any SNEC right now, but I remember SNEC got so big at one point when it first went up to 100 million market cap. It was probably trading like crazy on VyFi. I remember the blockchain was getting clogged down. I'm like, SNEC's got to slow down here. Like it's crazy, right? Things like that happen, right?
SNEC was insane. Like, even at the moment, our so we're really interested in what we call the volume to liquidity ratio, which is essentially the ratio between the amount of volume that a token's getting and the amount of liquidity that it has in its liquidity pool. Because when you're looking at farming, you're looking at farming to boost your volume. So you want to understand, where can I get the most bang for my buck in terms of liquidity? SNEC, since we've launched that pool, has been averaging 5x its liquidity in volume. Right.
And I noticed that I've used VyFi. There's a video on this channel, Crypto Moose, where I show people how to do yield farming, and I've used VyFi and I've used SNEC because the APR, APY, however it's calculated, it's pretty good, right? But the volatility is there.
The volatility is there, and that means the fees are just earning heaps because it's just moving so much. And that's actually why we're launching a SNEC L2 LP on the 17th for that exact reason, right? So then this is something that we'll move into it. Yeah. So one of the biggest, another reason to use VyFi, one of the biggest issues people face in liquidity mining is, of course, impermanence risk, right? And impermanence risk can be a killer. It can also be a godsend. Let's be honest. It's really just about understanding how it works and being able to implement it effectively into your trading strategy.
Can you explain to people what is impermanent risk? What are you talking about? Because this is very complicated. I mean, from my perspective, I think it's the fluctuation between the 2 assets. Because when you're doing staking, you're staking one asset, you're getting a little bit of the new supply in terms of Cardano. With yield farming, you pair 2 assets and you're providing liquidity to a pool like VyFi, and you earn rewards for that, right? That's kind of the different staking. So what is impermanent loss? Because that's something that I'm not even able to explain that well.
I want to use an example from traditional finance because this is the same thing that banks experience when they're trading currencies. So it's actually not something that's unique to crypto. Let's say you're Canadian, so I'm Australian. So we've got a swap between our currencies, the Australian dollar and the Canadian dollar. That's the AUD-CAD pair. Now, the AUD-CAD pair is traded on the open market, but let's think for a moment what's happening functionally when a trader swaps between these currencies, right? I'm an Australian and I want Canadian dollar, so I have to go to a bank and I give that bank some Australian dollar. Now, this bank has got a large pile of Australian dollar and a large pile of Canadian dollar. And when I hand them Australian dollar, they add their Australian dollar to their Australian dollar pile, and they take off from their Canadian dollar the same amount, with a little bit less because fees, and then they give you that Canadian dollar. So what's just happened to their reserves of Australian dollar? Well, their reserves of Australian dollar have gone up. And what's happened to their reserve of Canadian dollar? Well, their reserve of Canadian dollar has gone down. Now, on any single trade, exactly, we've got this motion happening, right? Now, on any single trade, we're going to have very small fluctuations, right? They're very large piles of money, right?
Yeah.
But over time, when a currency is, let's say, going up in value, so let's say Australian dollar is going up against the Canadian dollar, what that means from a functional perspective is that lots of traders are giving the banks Canadian dollar and taking out Australian dollar. So what's happening to the bank's reserve of Australian dollar while the Australian dollar goes up? Well, the bank's reserve of Australian dollar is going down because people are taking it out of the bank. And what's happening to the bank's reserve of Canadian dollar as it's going down? Well, it's going up because people are giving the bank more and more Canadian dollar, right? And what you're getting is and I call it the tendency to accumulate shit. Forgive my Australian or French, I should say. As a token in a pair loses value, you are earning more of that token that's losing value, right?
Yeah.
You're losing the token that's gaining value.
Yeah.
That's impermanent risk, right? Now, the way that I just said it made it sound super duper dire, right? Because it makes it sound, oh, well, so I'm just going to be gaining whatever token's losing money. But that's the wrong way to think about impermanence risk, because that's just the function of how it works. Now let's think about how we can actually use it to our advantage. So I want to take this like a couple of steps further.
Yeah.
Right. Now, as I have a pile which contains two assets, right? Before it was one asset, my cryptocurrency, Bitcoin, let's say, or Cardano. Now I engage in a liquidity pool and I have two assets, let's say Cardano and VyFi. So in my liquidity pool, my assets are held 50% in Cardano and 50% in VyFi. As the price of VyFi goes down, or back to the impermanence risk example, I begin to earn more VyFi in that pool. What's actually happening is I'm hedging my VyFi position. Because as VyFi decreases in value, I earn more VyFi. Hence, I am partially hedged against a reduction in price to VyFi. In fact, the hedge is about 50%. So when you're looking at impermanence risk from a portfolio perspective, so from your net portfolio value, impermanence risk is actually a tool that allows you to reduce the net price fluctuation on your portfolio. In other words, minimize your alpha, minimize your gamma, and minimize your total risk. Right? And in doing so, you can set up impermanence risk portfolios that allow you to head towards alpha neutral positions in the crypto market. Right? By layering multiple liquidity pools on top of each other, let's say you have Bitcoin, Ethereum, Cardano, and USD, right? Between these three, I can match these three up in any combination, some with Bitcoin and ADA, right? So now I've got a portion of my Cardano that's hedged against Bitcoin's value. So that means if Cardano goes down against Bitcoin, I earn more Cardano. So my Cardano amount goes up, right? So it allows you to engage in a safer manner of trading, what we call spread trading.
It kind of feels like cycle safety kind of thing.
Yeah, it's hedge safety. The word for it, and the word for it in trading is spreads, right?
Yeah.
And what liquidity pools essentially are is the cryptocurrency equivalent of a token spread. And let's quickly describe what a spread is.
Yeah.
When you're working in, a hedge fund, as I think the name should sort of gather, it's a hedge fund. So the entire concept is you hedge, right?
Yeah.
You're not supposed to be playing outright in any market. If they catch you playing outright in a market, you get in trouble. And by outright, I mean just like buying a position in a market and not hedging it anywhere. So the way that you do that is you don't actually engage with one way that you do this, is you don't actually engage with markets directly. You engage with markets through what's called a spread on the market. And a spread on the market is generally built on futures exchanges, but we can also do it using spot contracts. And it essentially means that you buy and sell the same asset at the same time. So an example of that is if I was to buy $1 million worth of gold because I thought gold was going up, what's the easiest way to hedge my position? Well, it's to sell $1 million worth of gold at the exact same price. That would be a perfect hedge, right? I'm not making any money if it goes up, and I'm not making any money if it goes down. I'm essentially just holding my money in the market, right?
Yeah.
And I'm just paying fees. But we can scale that back and we can create smaller hedges. So let's say that I think the gold's going up, but I also want to have a bit of a protected position on that. What you would do is you would find what's called a correlated market. So a market that moves very similarly to gold, let's say silver. And we would buy gold and then at the same time sell silver. That's called the gold-silver spread. And now you enter a position where you have bought gold, so you're long gold, and I'm short silver. But I'm long more gold than I am short silver because I've got my long gold bias. I think gold's going up, right?
Yeah, well, yeah. You're hedging more of the gold. Like, it's your belief for that.
Exactly. So I'm protecting my belief by selling silver, but I'm still executing my belief with my larger purchase on gold, right?
Yeah.
This is essentially how a liquidity pool works between two tokens, right? You've got a front token and you've got a back token. Let's say ADA, let's use an example, ADA VyFi, right?
Yep.
The front token's ADA, the back token's VyFi. I am, by definition, holding 50% value in both assets. That's how liquidity pools work.
Yeah.
Right? So this means that as the value of one of my assets goes down, I'm gaining that asset to make sure that the value remains at 50% against the other asset, right? Because they both have to match.
Yeah.
And I've essentially built myself a spread. You're no longer trading the price of any of those tokens. You're trading the price of the difference between the tokens. For example, back to our gold silver example, right? Let's say gold is at $1,000. Let's keep these numbers easy, right? Gold's at $1,000, silver's at $100.
Okay.
Right? I know these numbers are totally wrong. In this circumstance, let's say I bought $1,000 of gold, right? That's one gold contract. I sell $1,000 of silver, right? That's 10 silver contracts, right? What's the net value of my position? Well, the net value of my position is just my front position minus my back position. So that's 1,000 minus 1,000. It's 0, right? Just to simply conceptualize it, right? Now, this is how you calculate a spread. And a spread that's in perfect alpha hedge should always be at 0. Right? Because a spread that's perfectly hedged isn't going to be gaining value in any direction, right? But what we look at when we do, liquidity pools, you're not perfectly alpha hedged. So let's say we do something like ADA VyFi, right? I engage in the ADA VyFi. We're 0.38 at the moment, right? 0.38 ADA.
Yeah.
So that means that I'm now trading the price difference between these. We're 20 cents, ADA's 52 cents. So for every LP token that I buy, I'm not actually trading VyFi at 20 cents and I'm not trading ADA at 52 cents. What I've just entered is I've entered the position of ADA VyFi at a price difference of 52 cents minus 20 cents, right? And that's 0.32. So that means by buying the LP in your spreadsheet, you should be putting down, I have entered ADA VyFi at a price difference of 0.32 cents.
Yeah.
Right?
Yeah.
Now, if that price difference goes up, right, then you experience what's called impermanent loss. That's where I earn VyFi and lose Cardano. I lose the front quoted token. I gain the back quoted token. That's impermanent loss. But if VyFi goes up in value, you experience what's called impermanent gain. Now I'm gaining the front quoted token and I'm losing the back value token. In other words, you're getting more ADA and you're losing the VyFi because VyFi is going up. Remember, you accumulate the token doing worse. If ADA's doing worse,
it's a flow, right?
Flow, right?
We also have like the arbitrage of people taking and moving and getting all that, right?
Absolutely.
It's all like a big current. So currency, right? Current.
And that's why in hedge funds they call it flow trading.
Makes sense.
So what we're doing is you need to change the way that you think of entering liquidity pools. And I guess this is the core point of what I'm saying, and it will really help users sort of conceptualize what they're doing, right?
Yeah.
When you enter a liquidity pool, you're no longer trading the outright value of either of those tokens, right? You've now engaged in the spread and you're trading the difference in the value between the two tokens. If the difference in the value between the two tokens gets larger, you're going to have impermanent loss and the net value of the LP goes down. If the difference between the two tokens gets smaller, then you're going to have impermanent gain and the net value of your LPs goes up. Either way, you're reducing your outright price risk on the token, the back-quoted token, the not ADA.
Yep.
You've reduced your outright price risk to that token by 50%, which means if it goes up, you make 50% less. If it goes down, you lose 50% less. So you're hedging and you've entered a spread, right? That is essentially what impermanent loss is. And it's not just this loss of money where things are going into thin air, right? It is a tool that has been used in traditional finance for years to hedge positions, right? And it is an institutional level tool, right? The understanding of impermanence risk, engaging in spreads and using spreads to build futures structures, that is an institutional level tool. So I can understand why it's very difficult for new traders to engage and understand these concepts. So definitely, if you have any questions, shoot them to Crypto Moose. I will be on in a couple of weeks, and we'll go through any questions about impermanent loss that sort of came out of that. Sorry for the big diatribe, and I don't know how complex it is.
No, for sure. I still have to practice to be able to explain it. So one thing I did want to ask is, and it kind of occurred to me recently, is the one thing with Cardano, specifically if you want to get in and out of positions, how hard is it now? Because there isn't a stable coin that you can really use, right? Like what are people using? Do you find that people are trying to use, what is it, like IBTC or whatever it is? Like, how do you deal with that as a DEX, to build your DEX?
That is one of the biggest problems that we have, right? It's really hard without a solid stable coin to be able to quickly move between your positions. In so doing, I find that our major focus is really how do we reduce the risk on the net holdings that the business has, right? Mm-hmm. And the best way to reduce the net risk on the holdings that the business has, and I think we were just discussing it, is actually impermanent risk, right? Because if we're going to be keeping it on chain, the only way we're able to reduce our net exposure to the price of any given token is to engage with liquidity pools. That's the best tools that we have.
Right. But also if you're gonna do yield farming, like if you had a stable coin, wouldn't that reduce a lot of the risk too? Like you got a stable coin that's pegged to the US dollar or whatever it is, like that would allow for one of the two assets to be a lot more stable.
So we currently focus on JED in the business for our stablecoin and USD and USDT. Of course, I don't like USDT, but that's just how it is.
Yeah, Tether should be all right for now.
Yeah, right. Exactly.
I don't know. We're not going to talk about it.
Yeah, exactly. It's not my deal, but that's how it is. So I used to only hold USDC, and then all that hubbub happened with USDC last year, and I was
really?
Okay, well,
yeah.
They depegged hard.
Not like Terra Luna.
They came back. Sorry?
Not like Terra Luna.
Oh, no, not like Terra Luna. They came back. But look, IUSD is having a tough time. So, but anyway, that's stories for another day. We're not here to talk about the technicalities of stable coins.
Yeah.
But in general, by engaging with stable coin liquidity pools is the way in which we use to principally manage that risk, right? Because that one allows us to actually use our assets to earn some degree of income, right? Which is nice. Yeah. It's always nice instead of not earning anything. And it also means that if the price of ADA goes down, we're only experiencing 50% of that price fluctuation. Right. So the real secret is to just ensure that we are regularly managing, I should add, our impermanence risk so that we're able to optimize against the possibility of the dumps on the stablecoins. And the way that we do that is, one, by having bots that monitor, of course, react quickly.
Yeah.
And the other way that we do that is, well, another way that we're doing it is we're working closely with Meehan, because we're also really excited about Meehan. We've got early access to Meehan systems
Okay.
to be able to start minting Meehan. So that's something that we're really excited about. And have you heard of Meehan Finance?
Yeah, I
Should
think they
I?
had an ISPO that ended recently. I didn't get into it, but
Yeah.
yeah, yeah, I saw it. I kind of know what their
Yep.
logo looks like a bit. I'm
hmm
not too familiar with what they do. Could you explain that?
They're just doing 100% cash backed stablecoin.
There we go. We need
So,
that. Like we need something.
well, it's a
It'd be
tough, it's
cool.
a tough, it's a tough one. Just a little aside on Meehan. I
Hmm.
love what they're doing. It is a really tough one because for a cryptocurrency and for a stablecoin to have some kind of level of large adoption, you need to have enough volume in that cryptocurrency, right? Or enough volume in that stablecoin. And that's a very difficult thing to do if everything has to be one-to-one backed by cash, because you need a lot of cash. That's it,
Yeah,
right?
yeah. I mean, they're not
So
getting it from the moose. Like I'm hoarding all the cash. Like,
so I absolutely love what they're doing, and I'm trying to help them with it as well, because I think exactly as you said, it's something that we really need. And I think if we can get the liquidity in that system, it'll be super powerful for Cardano.
one thing that I've noticed, and I think it was like getting into Solana, they had what it was called like Jupe, the Jupe aggregator, and I didn't know what an
Mhm.
aggregator is. Do you guys have features like that? Is that something that is like,
So we are bringing out an aggregator. That's our auto harvester, and the auto harvester will essentially just automate farming for users. So
that's
users
dope?
will be able to pick bundled strategies, and those bundled strategies will, let's say, as an example, Cardano deck strategies. So with Cardano deck strategies, they jump into a the Cardano deck strategy auto harvester, and that'll automatically put them in the Cardano dex tokens and will automatically farm them across the dexes on Cardano. And then that'll aggregate all of those farms, bring it back to the user, and then the user will be able to. They don't farm it, right? When you're in an auto harvester, you essentially hold the auto harvester token, and the value of that token goes up as we roll the farm back in, because we bring it back and we put it back into the farm. So it's sort of like an automated rolling process. This is literally we've got our catalyst up for it. Actually, if you could share a link to our catalyst, that would be amazing.
Yeah,
I'll
yeah,
send
that'd
that
be
over to you.
awesome. Literally, I have a free Cardano mini course. It's 1 hour, comes with the
Mm-hmm.
workbook, and I use
Mm-hmm.
Vyfi for the yield farming. So we set up
Oh
a Nami wallet together, like that. Like those are cool videos. So
man, you should have let us know. We would have pushed that to our community as well. I'll definitely get that going.
yeah, we'll talk
Um,
about that. Yeah, yeah, we'll
we
talk about
will.
it.
Look, and actually, this kind of brings me back a step. This takes me back a moment. The reason I was talking about impermanence risk in the first place was because I wanted to mention our L2 LPs and talk
Hmm.
about them in a bit more detail. Let me first just finish this up. So these auto harvesters will essentially be designed for multiple different sectors across Cardano. Like AI tokens, um, RealFi tokens, DEX tokens, DeFi tokens. There's a whole range of different sort of sectors within the blockchain. And then the strategies can be updated through governance. This system is essentially going to be an even one further step towards automating the process of engagement for users, right? And this isn't a tool that's just useful for new users that want to engage in yield farming but don't want to sit there and manage impermanence risk across, 7 different tokens.
Yeah,
This is also a useful tool for experienced traders who do know how to do all that but just want to automate portions of their portfolio. So if you know that you want to be invested in Cardano DeFi overall, right, you can put 5-10% of your portfolio into the auto harvester, and now you know that you're invested in Cardano DeFi. You don't have to sit there and manage all the Cardano DeFi tokens one by one,
yeah, yeah,
right?
yeah, yeah.
So it's essentially acts like the way that we're describing it is an indexed fund for LP tokens, because we're aggregating multiple different liquidity pools from across Cardano, and we're giving you the farm from those different liquidity pools.
Yeah, and I think we kind of talked about that too, right? So it's kind of like, yeah, like an index fund. So it'd be like a basket of different
Mm-hmm.
assets, and you have better exposure to the entire ecosystem in that regard,
Mm-hmm.
right? Which
That's
is
exactly
cool.
it.
I like that. Like the main one I think that I really liked a lot about Vyfi, I always talk about it, is the yield farming. Just it
Mm-hmm.
feels like fewer transactions compared to others. It really
It is.
does. And that makes all the difference in the world because again, most people don't even know what yield farming is, but they see the crazy APY, APR, and it's like, how do I get into it? Well, you pick your two assets, boom. It does a lot of the magic. It's really cool. So
That's it.
actually, I want to explain this then, or have you explain it. When you're yield farming, you're given an LP. What is that? Can you explain what that is for people? Like maybe
Yeah, of course.
dumb down what is yield farming. That might even be a clip.
Yeah, LPs are super simple to understand. They act in the exact same way as a stock in a business, right? I buy a stock, and that stock represents the percentage of the business that I own. If there are 1,000 stocks and I have 100 of them, I have 10% of the business. But just like in real life and businesses can choose to create more stock. They can go, hey, guess what? We're going to release another 1,000 stock. That's called stock dilution.
Except for Berkshire. Except for
Berkshire, yeah. There are companies that don't do it, but the option is there for them, right? Yep. They're allowed to. And if they do that, that means the value of your stock, guess what? Goes down because there's more stocks now. Right? Most of the time, they don't just dilute you, they give you more shares, right?
Yeah.
Now, this doesn't need to happen in LPs, because what's really beautiful about the ratios in LPs is that your count is additive, right? So it's not actually a dilution. Every time someone adds an LP to the pile, it just pluses on and makes it bigger. So it's like the pile just keeps getting bigger and bigger, right? So if you have 1% of $1,000, right, that's the same as having 0.5% of $2,000.
Yeah.
So as the LP gets bigger with you, the amount of LP that you have still represents the same proportion of your ownership as it did before. So it doesn't need to mint you more stock, right? In other words. So what it does is it just tracks the amount of the percentage that you have in an LP. It just tells you how much of this LP do you own. And that amount that you own as a percent can change, right? Because people can add and remove an LP.
It's like having 1% of a bigger, it's like having a bigger piece of the pie versus like a smaller piece of whatever, a bigger pie. Like it's like that, right? Like it's not about, if you make 100% of $100, it's not as good as 1% of a million kind of thing, right?
Exactly. Right. That's exactly it. And I guess, and that's, I think, was what confuses people, is that they're always holding the same amount of LP, but they're always seeing their percentage ownership of the pool just like fluctuate and change. Right. And you just need to realize that in liquidity pool, exactly as you just said, right? It's all about a percentage. Your amount stays the same, but the percentage that amount represents changes. Right?
It really is kind of trickery. It is trickery, especially if you're not patient at all. And then you do have the impermanent loss, so you think maybe it's that, but it's not, right? I've experienced that, right? Where at least getting started, right? Not as much anymore. Now I'm like, I always tell people, I just did a video. You have to get more educated. If you get educated, I mean, just, do interviews with CEOs of, some of the greatest dexes on Cardano.
Thank you. Thank you. That's very kind. And actually, now that you mentioned impermanence loss, that let's bring that back to L2 LPs. Yeah. So one of the advantages that we have for having stakeless LP farming is that the LPs stay in the user's wallet. And I have mentioned this before. This allows users to create L2 LPs. And these L2 LPs allow you to match an LP token with Cardano to create a liquidity pool for those liquidity pool tokens. So new users are able to go straight to the front end of our DEX, right? And they're able to purchase liquidity pool tokens straight from the DEX. But the other advantage to this from a investor, so the actual liquidity provider perspective, is the fact that you, who engage in an L2 LP, the layer 2 liquidity, have now reduced your impermanence risk by 50% on your net portfolio position by engaging. And the reason for this is really simple. In an LP token, let's say Art of Vyfi, your net portfolio value is 50% Vyfi, 50% Cardano. If I now take this LP, which is 50-50, and I match it all with Cardano and put it into a liquidity pool, now my net portfolio value is 75% Cardano and 25% Vyfi. Because I've got the 50-50, and then I've got the 50% all in Cardano. So now when the price of Vyfi moves, rather than the net value of that LP token moving at a rate of 50% of the value fluctuation of VyFi. The L2LP moves at a rate of 25% of the value fluctuation of VyFi. So the L2LP gives users the capacity to take a position and give themselves a 75% hedge instead of a 50% hedge on the actual value of that token.
Would that affect would that affect how much you're making in terms of like your ATR, APY? Because the more stability you have, that would help out the impermanent loss, right? So in a way that would help, right? Your overall,
so impermanent loss goes down. Literally what you're describing is how the market works, unfortunately, right? As you have less risk, income goes down. That's a little bit just how the world works, right? So our L2LPs in general all have got lower APYs than the L1s. Why? Well, you've got half the risk. If you've got half the risk, then the market is going to give you a lower payout for it. And that's not based on us. That's based on the amount of liquidity in there, right? Because it's a farm.
Yeah.
If you're in liquidity pools, you not only do you want volatility, you breathe volatility. The way that liquidity pools earn fees is through volatility, right? So what your ideal scenario is, you can lose 90% of its value and then make it all back, right? Because that way you're going to have or gain 90% and then go back to where you started. That's also fine. Because if it gains 90% and you thought, oh, I made heaps of money, goes back to where you started, like, well, I'm back where I started, but now I've made all the fees from all those trades going up and down. I mean, there was a point where our SNEC fee generation was like 112% APY 2 weeks ago. I was like,
2 weeks ago insane. Too? Oh my god.
Yeah.
Well, I remember like Meld had a really good one for a while there. I think it was Meld, right? Like Meld, it's fluctuating enough.
Gens, we have the largest Gens pool.
Cardano, is it Gens X or just Gens?
Just Gens.
Okay.
And that notice, I was a little bit mind blown when I noticed that. I was like, oh wait, we got the biggest one on Cardano. How did that happen?
Hey, that's awesome.
Is trade safely and use impermanent risk to your advantage as a trader. Don't be scared of it. Learn about it and work out how you can use it to minimize risk where you want to minimize risk.
Yeah, that makes sense. So if somebody wants to get started and they've never used VyFi, maybe they want to get in yield farming, or like what would you advise them, not advise them to do, but like what would you recommend would be an interesting tool for them to play around with? Like what kind of wallet should someone set up? Like how could somebody get involved?
My personal favorite has become Vesper, VESPR. I love Vesper. That's become my principal wallet of use. I would say that if you're using a desktop, Eternal is probably my favorite. They do definitely have some stability issues at times, but we work fairly closely with the Eternal team. So we have a direct line with them for any issues that we're having, which, means a lot to a business to be able to say, hey, we're having problems, and to actually be able to talk to the people.
Yeah, you're running a DEX. People are connecting. And by the way, like how many wallets do you support? Do you guys support VyFi?
We support 5 plus hardware wallets. Actually, that's one of the things we want to expand. We want to expand our wallet integrations. But at the same time, that's not number one priority. We've got to do languages first. So we definitely Eternal if you're going to be using desktop. The best place to get started if you're wanting to learn, by the sounds of things, is Crypto Moose. He's got a heap of videos on how you can get started.
Like I'm building a library of beginner level stuff, right? Like I do have that 1 hour Cardano mini course. It's on the channel and I have a link, but it's great because in 1 hour we set up a wallet. I show you how to back up your Nami wallet or whatever wallet we use. And it's just cool. You cannot you'd have to physically be here with me and you still wouldn't get the same amount of learning within an hour. So yeah,
it's condensed and you thought about it a lot more than just teaching someone on the spot. So go check that out, guys, as a starting point. And then if you want to go more into the intricacies of impermanent loss and impermanent gain, how these structures work, your first real protocol, because there really isn't much information out there on this, right? Unless you're happy to read economic papers and you love doing some maths, right? If you're happy to do some maths, then yeah, there's a bit out there for you.
My math is terrible.
Yeah, on a more intuition level, I really recommend going out and learning about spread trading, understanding how alpha works.
What does that mean?
And
What is
alpha
alpha?
is your risk reward ratio.
Oh, okay. I have an idea of
Um,
that.
and understanding how you can use spreads to minimize alpha, right? So to essentially reduce your net risk on your total pile. And be careful, you don't necessarily want zero alpha, right? You don't necessarily want something that has zero risk, because if you have zero risk, you tend to have zero reward, right? Like I said, if I buy $1 million of gold and simultaneously sell $1 million of gold at the same price, yeah, I got no risk, but I'm also not making any money anywhere, right?
Yeah, that's true. And by the way, we're not telling anybody to buy any specific tokens, invest at your
No,
own
not
risk.
financial advice.
Nothing's financial. I mean, yeah, like nothing's financial advice.
And actually, on that note, let's talk about a few of the things that we're building that will be coming out really soon.
Yeah.
So first, it was meant to come out last year, but we got a little bit delayed. But governance should be coming in the next, hopefully by the end of this week, maybe beginning of next week. But I'm feeling really confident now, so I can say that.
So when you say governance, what does that mean? Because like quite honestly, I
We're
don't know
setting up.
exactly what people mean by that when they, there's a lot of different, whatever.
Yeah, of course. We're setting up a treasury so that we've got the capacity for the governance to be able to vote and actually access some assets. But on top of setting up a treasury, we are setting up a proposal system so users can put up and discuss proposals. And on top of putting up and discussing proposals, people can then take the popular proposals and vote on them to have them implemented. Some of them require a budget, some of them won't. I know one of the big ones that people are talking about is a burn. So we've got 450 million total supply.
Wow.
There's a large amount of people in our community that want to burn that.
Really? Well, yeah. I mean, burn it down to just my wallet.
250,
Just leave my
yeah,
tokens.
just to my wallet.
So how would you burn? How do you know what to burn? Like what do you got?
Well,
tell me about that.
that's part of the community to discuss, right? I set up then this is a whole discussion on emissions, and I've got an article on this that's on our Medium that I highly recommend if you want a bit more information on this.
Yeah.
But we set up our emissions at VyFi to be a 20-year schedule of release, right? So yield farming for a very long period of time. And at the rate that we're yield farming right now, we've actually got 43 years of yield farming in the bank, right? Because we're only releasing our yield farm at about 50% the rate. So that means that as it stands, we can essentially yield farm until I'm probably dead. So I can understand why the community wants a sort of more immediate, I guess you'd call dopamine hit, burn a whole bunch of those that we're not going to see in 20 years anyway, and let's get a price pump now. One of my main philosophies when building VyFi was that entire concept of longevous farm, users being able to farm for a long period of time, and us being able to provide farm out into the future, right? Even 20 years time, I want to have a system that can provide farm. And that was my original philosophy. And I know that a lot of the community, I shouldn't say my community, they're not my specific, but a lot of the VyFi community agree with that philosophy as well, right? So this is going, and that was my core philosophy. So this is going to be a bit of a debate between the philosophical stance within the community, right? Did my philosophical stance convince the majority of the community or not? Let's go find out. But even then, I do know that the community still likes the idea of the long term, right? So even if we were to burn, let's say, 200 million tokens, we've still got 21 years of farm. So it's not like it's a short period of farm.
Yeah.
So that's an example of one of the votes, right? So all these things that sort of impact the way that the system is being built. So we've also got the bar, which is the first distributive mechanism on Cardano. It's, I should add, it's the first decentralized distributive mechanism. It's all automated, built into the DEX.
Yeah, that's sweet.
And the way that it works is that a percentage of every trade is actually used to buy back VyFi. And then that VyFi that's being bought back is sent into the bar and distributed amongst all VyFi holders, right? Or all VyFi holders that have deposited their VyFi into the bar. So it's essentially another passive income stream that you can get from VyFi is by putting that VyFi in the bar.
That's really cool.
We've got quite a few levers in our system which dictate the rate at which VyFi is being distributed to the bar. And it's always a give and take. right? Because if I'm moving fees from the bar, from liquidity pool fees to the bar, that means that that's less fees that are being given to the liquidity pool providers, right? So I know that there's a camp in our community that want to reduce the bar by half and increase liquidity pool provider fees to incentivize more liquidity pool provision, right? On the other hand, I know that there's a camp of the community that want to do the exact opposite. They want to double the amount that the bar's getting and reduce what the liquidity pools are getting, right? So yeah, they're not. I don't have an answer. And in fact, one of the big reasons why I wanted to bring out governance is because these things are complex. I don't have a correct answer to them. So it's really nice to be able to devoid myself of the responsibility and let the community vote on some of these things and say, well, look, this is your decision, guys. Let's see if it works. The bar isn't non-custodial. The bar isn't non-custodial. Okay. That's what X-Vyfi is. So when I put Vyfi into the bar, it mints you X-Vyfi. And then you hold that X-Vyfi. That represents your ownership of the bar. X-Vyfi is essentially an LP token for the bar. Right? That's the easiest way to describe it. And you can actually buy X-Vyfi directly. You don't even need to buy Vyfi. You can actually just go straight to our DEX and you can purchase X-Vyfi straight from the DEX, right? Because X-Vyfi has also got its own liquidity pool. It's got about 1.1 million in liquidity in X-Vyfi.
Yeah, but then people are going to want you to start burning the LPs.
No, absolutely, they are.
Where does it end? Governance, like that's the thing.
It never does.
I mean,
it never ends.
Yeah, but that's the thing. But that's the thing, right? Like we're opening up this decentralized world for, you have your own non-custodial wallet, and then it's like, how do we make this more like the old banks, right? And you're kind of seeing that in some ways. I'm not saying you guys are like that, but like I just watched The Big Short again, and I'm like, there's always something you can do. There's a lot to the currency, and it's got to flow somewhere, right? Like.
Great movie, by the way. That's the movie that actually got me to start working in hedge funds. I watched that movie after uni, and I was like, I don't know what I want to do with my life. I watched that movie, and I'm like, I want to be a trader. Yeah.
I mean, I don't know if I'm a trader, but I'm definitely a crypto investor. Like, it's
So governance is coming. Really excited for that. We've got another one coming called, which we're calling the transaction cart, which we're super excited for. It's the first time we're seeing this on a DEX, as far as I'm aware. And it behaves just like a shopping cart. If I go to the shops like Amazon or wherever it is, I don't buy one object at a time. It's really tedious if you have to do that. You have to check out with one object and then get another one and check out and then get another one and check out and then get another one and check out. And yet that's the way that we treat trades, right? We treat trades on an individual checkout basis.
100%.
Which if you think about it from a user utility or from like a user interaction perspective, that's non-ideal, right? Because users have to wait, do one, wait, do one, wait, do one. So we're essentially introducing, again, and this goes back to what I was saying at the beginning, uniquely Cardano solutions for uniquely Cardano DEX. Because of the Cardano UTXO structure, it allows us to create transactions which do 8 swaps at once. Right.
So you could swap 8 tokens in one transaction and pay 1 fee.
Yes, correct.
I don't know if you guys are listening to that, but that is awesome.
And I should add, though, just to add quickly, that's one blockchain fee. You still have to pay the swap fee for each swap, right? Because it is going through each liquidity pool.
Okay. But right? so do you save on transaction costs? Do you save it all doing that?
So let's say at the moment transaction cost is 0.34 ADA per transaction, right?
Okay.
So if you were doing 8 trades, you'd be looking at approximately 2.72 Cardano. But with this system, all you would do is you would just set up the trade exactly as you would normally, right? And then instead of pressing confirm, you press add to cart, and then it gets sent into your cart, right? And then you set up the next trade, add to cart, gets sent into your cart. And I wanted to demonstrate it here for you today, but unfortunately, it's just not.
When is that? When is that coming live? Because I'll do a video on it. So
end of the month we're hoping.
Yeah, like there's a lot of time. I'm going to be doing more individual videos, and I mean, you present these ideas, and you guys have been awesome with us. So
thank you.
I mean, by the way, like guys, we're giving away some Vyfi to Loose Moose holders, so that's part of this as well. So it's great. It's cool.
And so, but back to that original example, example, right? Over 8 trades, you're spending 2.72 ADA. But if you use the transaction cart, well, you're only doing 1 transaction, so you've only got 0.34 ADA in fees.
Okay.
Right.
Big deal. That's a big deal.
Well, if you're someone who trades regularly and does, a lot of trades like I do, like I would say I'm
Yeah.
easily doing 20 to 30 trades a day,
Yeah, but now
and
you're gonna
you,
have the governance people. They're gonna be like, we don't want that because we're providing liquidity and we want the trading money, right?
yep,
Right?
exactly. Ugh,
Because by the way, guys, like some people don't
ugh,
know, when you
nothing's easy.
provide liquidity to a pool, like how are you making that APY, right? You're getting that because of the trades that are being made on the decks. So
Hmm. Partially, and
whatever.
also because we mint Vyfi to you.
That too. Yeah.
Hmm. Now, when this transaction card end of the month, I'd love it if you could show it to your audience. It's something we're really excited for. It's something really
Yeah.
unique, and again, it's a uniquely Cardano solution. You couldn't really do this in Ethereum, um, due to the structure of their account, due to the account-based structure of the blockchain, right? Cardano allows us to do this. Again, it's a uniquely Cardano solution, right?
Yeah.
The next one that we're implementing, the next one that we're bringing out, hopefully in February, is lock and load vaults, and that's something we're really excited about.
Yeah.
And I was talking to you a bit about this before we started. Now, this one was born out of a real world problem, and we were working with EMP. I'm going to name drop. They might get angry at me, but I doubt it. Sorry if you're annoyed at me, EMP. We were talking with EMP, and they were annoyed. I don't know if annoyed's the right word, but they were pondering the issue of liquidity and how when projects create dual rewards and start pushing out their token, you've got no security that that dual reward will actually result in more liquidity, but you do have absolute security that it's going to result in more inflation,
Okay.
right? So there's essentially a disconnect for a lot of particularly smaller projects in the risk that they're taking on by pushing out, let's say, $50,000 worth of their token, particularly if they're not even able to garner 50,000 worth of liquidity by pushing out 50,000 worth of their token, right? So they wanted to develop a more direct method to be able to garner liquidity for the project. So we've come up with this concept of a lock and load vault, is what we're calling it. And it's essentially where the project puts up the tokens that they were going to put into Jewel Farm, right? So whatever they were going to send into Jewel Farm, but rather than putting them into Jewel Farm, i.e. users create an LP token and then earn it, what users do is they actually send in their Cardano to the vault, and then the user gets given the same value of that Cardano in the project's token. They get matched, and then they get put into liquidity. Once they get put into liquidity, it gets moved into a VyFi vault, and you can see it from our vaults page, and the LP tokens get locked for a period of time that the project determines, let's say 3 months or 6 months. And then after that period of time, you can come back and you can claim that LP token, and then you can keep the LP, you can break the LP token and sell it, you can do whatever you want. It's your LP token, right? But it allows you as a user to engage with the liquidity of these smaller projects while only taking on half of the price risk, because they're giving you the other half of the project's tokens to put into the liquidity.
Okay.
Right? So it essentially creates a new method for projects to directly take their airdrop, their airdrop supply, what they were going to be giving out for free, and convert that directly into liquidity. And for users, it gives you a novel way to be able to engage in risk in smaller projects, help them by giving them liquidity, and essentially earn some of their tokens for free.
Yeah.
Well, not for free, for taking on their impermanent risk for a period of time.
So in a way, is that kind of like, like you could participate in an ISPO, like an initial stake pool offering, and instead of getting the airdrop, like we're gonna use those tokens right away and like make a yield on it, kind of thing.
That's it. We're going to use those tokens right away and put them into liquidity so that
Yeah,
people can start trading with
it
them.
makes sense because like I'm in the Dega ISPO right now, so
Yeah,
that's kind of cool. Like they're instead of earning Cardano, the
aggregate
new
does.
supply, you get their token. But I
So
could imagine that instead we're already putting that to work.
yeah,
That's
exactly.
interesting. It's really just like the compounding of things and timing like you're dealing with, which is cool, right?
It's the timing that you need to think about. It's the risk that you're taking on the other project. Like it's a risky product, right?
Yeah, but this is crypto moose. Like we got to take on risk, right? Like we're not
True. You
showing
got
up
to
to the
take risks.
party with 2% gains, right? Like
That's it.
we need 17% at least, at
So
least.
so we're already looking at working with a few projects for these lock and load vaults, right? Because they want to build
Nice.
their liquidity. And we know that users want new and novel ways to be able to engage with risk, and to be able to be given a project's token for taking on impermanent risk. In other words, you get given 50% of the value inside that liquidity pool for free, right? So
Wow.
you as a user have a much stronger incentive to provide that liquidity than if you're just getting a dual reward. And the reason being is because dual rewards, if you're slowly earning dual rewards for 6 months, right, by the time you get them all over the period of 6 months, if the price of the token goes down, you haven't necessarily earned money, right?
Yeah.
Whereas if you have a situation whereby I put in 1,000 Cardano into a liquidity pool, but the 1,000 Cardano worth of the other token is given to you for free, right? Now that can actually drop by half, and you're still at the same amount of money that you were before. So the risk for the user to engage with this product is lower than dual farms, whilst also directly providing liquidity for the projects. So it's a win for the user because it's less risk, and it's a win for the project because they get what they actually want, which is liquidity.
Yeah. So what would be some of these projects? Can you not talk about them? But like,
Well, I can mention one. EMP. EMP is the first one we're going to be launching with. So that's Empower.
Okay. Nice. Yeah. I don't know. I know a little bit about it. I haven't. Okay. That's interesting.
So we're going to be testing this with Empower. Like, testing is the wrong word. We don't need a test. We know the system works.
Yeah.
But we're going to be launching it to the
Doing the
community and
trial.
testing it with the community. Exactly. Doing a trial with it and see how the community responds with Empower. And it's a brand new concept. It doesn't actually exist. And I've never seen this done before on any other crypto, anywhere else in crypto, right?
Yeah. That's like, in my opinion, it's like taking an ISPO to the next level where it's like, we're already investing. Like, we're already making a yield on. Like, that's cool. That's cool.
Mm-hmm.
Why wouldn't you do that, right?
We're really
excited.
You do that? The next one that I want to mention, we already mentioned the auto harvester, but we're starting out production, and we're starting out, production. And I should say right now it's the scoping, and hopefully in the next sort of 3 to 4 weeks we'll start production on our V2. Because V2 has been a big hubbub the last few months in Cardano. I don't want to say a whole heap about it. I feel like a lot of people have been a little bit rude to projects that aren't V2s yet.
So when you say V2, what do you mean by that?
Plutus V2. Plutus V2.
Okay. So I mean, I know a little bit, but like, what is the main thing? What is that going to bring for you guys?
The main advantage to Plutus V2 is that it reduces the memory size, the size of transactions. Right. So as a starting point, the size of each transaction would be reduced by about 80%.
Big deal.
The other thing, and this is slightly more technical stuff, but it gives us access to tools like script forwarding. And we can do a lot with script forwarding. There's a lot of tools that we want to build out that we can't because we don't have script forwarding. So there's a few advantages. There's a few advantages to it. It makes the transaction slightly cheaper as well because it takes up less memory. Okay. And slightly faster. So there are a few advantages there that we definitely want to get, right? And the only downside to it, of course, is just the cost. It's about $500,000 because we have to rebuild our entire decks.
Holy crap! Are you serious? That much?
Yeah, wow. And then we also have to get it. Reaudited. So, yeah, and that's the only thing that I just want to add. People on Twitter have been really rude to projects that aren't V2 yet.
It costs money. That's a lot of money. Like, you got to be.
The one thing, and that's the one thing that I just want to add to a lot of those people, and I'm going to say it here, is just that a lot of them don't understand the realities of running a project and the costs involved.
Yeah.
And Hosky was really rude at one point and said, "Oh, it's atrocious. These projects are supposed to be earning money. Why haven't they upgraded yet?" And I mean, it's very easy to come from a meme coin that doesn't have any platforms and doesn't have to hire employees.
Yeah, but no joke.
When you have to hire employees and you have to run a platform that involves costs, you have to pay for these things, right? And yeah, it's $500,000 to do the upgrade. And I'm not saying that as a complaint. We have to do it. What I'm saying is just in defense of projects that haven't upgraded to V2 yet, you need to rebuild your entire project, and then you also have to re-audit your entire project.
Yeah, that's not a minor inconvenience.
It's not a minor inconvenience. So we've started the process on that now. We expect that to be anywhere between sort of 6 to 8 months before that's released.
Wow.
But we're going to be releasing hopefully our auto harvester before then. So, you know, we're a very busy production house. You know, we're running all these builds and all these different things simultaneously. As
But
you can imagine, I think
that is interesting. No, but it's very interesting you mentioned that because I know, at least on the gaming side, I've been following cornucopias for a while. You guys, you can pick up Copy on VyFi, right? And
we also have
that's
the Copy Vault on Vyfi. So we've got the only Copy staking.
I might be in there with one of my wallets. I have like a lot of wallets. So what I was getting at though is like they're right now they're doing their Copy node sale, right? So you look at the math and you're thinking, oh, it made whatever, $1 million, $2 million. But like you have 30 employees. Look at what you're trying to build. Like for your end, I actually I can't relate because I'm not building that, but I can understand that thinking, and you know I have empathy for that because yeah, people have to realize that what you guys are building, it's never even existed before, and it does cost money. That's the reality of it, and it's not like you guys are not taking advantage. You're building things, and the only way it's really ever going to get cheaper is if you know there's more competition and the market grows, etc. So yeah, like that's something that I see a lot in crypto where it's like, oh, they made a lot. It's like there's expenses, there's all that stuff, right?
The sneaky part that you know people don't really think about is how expensive technology is. Like tech is just not cheap, and I mean,
what about data? Data is the new oil.
It's exactly what you said. If you want to build things that have never been built before, you know, and particularly things that have never been built before that handle money, you can't half-ass it. You know, it's not something that you can just, you know, muck around with and be like, oh, yeah, let's, you know, be a bit half-assed here and fuck around there. Excuse my French there.
No, but there's a lot to it. Like I even started getting into some of the NFT stuff, and I'm like, you have to learn IPFS, you got to host it. And then like I have a video production business. So like I have a server, like it costs money. You're doing a RAID 6. You want to do a good job and do elite stuff. It, you know, you cannot, especially with you, like you have 5 different wallets, like that supports being connected to your DEX. Like you can't do half-ass stuff. Like you have to do it right the first time. Like I get that. I can.
So and that's exactly it. And there's a lot of pressure as well because we're not dealing with small sums of money. You know, we've got almost 30 million Cardano on our platform.
That much.
So
eh?
yeah, the protocol TVL right now. The protocol TVL it's at the top of our site. 29.36.
Yeah,
29.36 million Cardano.
Okay, so in terms of every DEX, where are you at? Did that exceed your expectations?
If you're in terms of DEXs, I think we're 3. In terms of maybe 4, because I remember Spectrum. Spectrum really came up last week. In terms of protocols, TVL, so that's if you include staking on DeFi Llama, we're 5th on Cardano.
Amazing. Like on one of the like top 5, top 10 blockchains in the world, you built something like that. So
it's not
like,
bad.
Yeah. For your
I'm pretty impressed. I'm considering, like, you ask, how do I feel? You know, how do I feel about 30 million? Was I expecting it? I started this business with $4,000. So like to have a protocol TVL of 30 million is absolutely wild. So did I expect it? Absolutely not. Like, no. And you know, it was at its peak, it got to about 72, 73 million was the protocol TVL. And I know that like my community, that some of the community, you know, they get sad when price goes down and when protocol TVL goes down. But the reality is, compared to where we started, which was with nothing, it's still incredible. You know, like I still can't believe where we are right now. It's, you know, thank you to the community, thank you to Cardano, and thank you to people like yourself, you know, talking about us and letting people know that we exist.
Yeah, but like what you guys are building is incredible, obviously. But it's like, it's really cool to see because I remember specifically when you guys, you guys jumped to like 50 cents per token. I was like, what's VyFi? That was big. I thought that was a big moment for you guys where your token price hit a certain level. That created a lot of attention, right? Was that the moment?
Yeah, look, that moment was almost our killer, you know. We, as you said, you know, we had this explosion when we first launched, like absolute explosion. we got to $1.24 at its peak, which was
Wow.
insanity. And the problem was that we had such demand on our decks, right? At one point we were getting, I think our busiest day was 9,500 transactions in a day.
Wow.
Which, wait a second, 9,500 transactions. That's like 7 a minute, 7 or 8 a minute, every minute for the entire day.
Yeah.
Now, on a global trade scale, that's not very large, but on Cardano, for a brand new DEX that is just testing out its functions all, that's a lot. And we hit capacity, and it was the most stressful 2 months of my life. I've never seen anything like it, because it was just trying to how do we get the system, like how do we optimize this system on Cardano to work? And now I understand, very intimately, when every DEX on Cardano is launched, every DEX on Cardano has had huge issues in terms of transaction throughput, getting trades through. Happened to Sunday, happened to Min, happened to Wing Riders, happened to everybody, us too. And we've lived it. I know why now, because it's just really, really hard. It's really hard.
For sure. If it was easy, everybody else would do it, right? Like,
yep.
It's not.
One of the classic issues that you have to face with as a DEX, and you can cut this if it's a bit long, but it's just a fun one. There's something called a race condition with canceling an order. And what that essentially means is that if someone puts in a cancel order, if the cancel order goes through on that block, then no trades can go through on that block. And vice versa. If trades go through on that block, then no cancel orders can go through. So if you've got a cluster fluff of people canceling orders and then submitting orders, what you essentially have is a 50% slowdown on all your trades, right? Because 50% of the blocks are going to go through to cancel orders and 50% of the blocks are going to go through to do a trade, right?
Yeah.
So there's one example of one of the difficulties and one of the things that we had to optimize, because there's quite a few parameters that exist around that, and we have to work out what parameters work best, right? And I would say that now we've fixed all of it. I would say that our function is fantastic right now. We've released our new front end about a month ago or 2 months ago. We've rebuilt our transaction builder. We've rebuilt our trading algorithm. I mean, we've done so many things that have sped up that process so that now we're very confident we can handle 10,000 transactions a day, right? So the next time that comes, we're ready for it. But to go from 0 to 9,000 transactions a day in the first 2 weeks was just insanity. Like we didn't even know what was going on. Me and I've got one of the team members here near me, and he's nodding his head. Me and the team were just like, what's happening? We were not expecting this.
Yeah, that's wild. I remember a lot of like anyways, when you guys were just blowing up kind of in those early days, you want to call it. That was sweet. So what else you want to cover? Anything else you want to go over? Or?
I think that pretty much covers everything, man. I think we've had you've let me.
Yeah, I don't want to. You already had so much going on before we started. I'm like, I'm gonna put this guy's gonna sleep good tonight. He's got so much to talk about.
That's exactly it, and that's the last thing that I want to say. I guess I'll add. If anyone has any questions, don't hesitate coming to ask us on our Telegram or our Discord. If you have any questions about impermanence risk, send them through to the Moose. He'll find a way. I'm sure he'll have no problem getting them to me, and I can sort of answer some of those questions that you might have around impermanent risk.
Yeah.
And last of all, come check us out, Vyfi.io, VYFI.io.
Yeah, so you guys heard it there. So we're going to end this episode. We will have a link to Vyfi in the description. Also, guys, check out the link tree. So we have all those links. And you guys also sent me 500 Vyfi to give away. So I'm going to pick some winners. I haven't decided how I'm going to do it yet, but for those of you that hold the Loose Moose NFT, you guys know that it's worth it. So, all right, let's go have a beer. Cheers.
I'm Australian. I think we've earned it. Thank you so much for that, man. That was good fun.